What's going on, my financial friends? It's your friend Jack here, and today we're going to be talking about 5 monthly high dividend yield ETFs that you can invest in as a Canadian. So stay tuned and get ready. We're going to take a look at them right now. And before we get into the 5 high yield monthly dividend ETF stocks, let's just talk about, if you enjoyed the video, smash the like button. But now let's actually get to the ETFs. Alright, and the first index ETF we're going to be looking at is ticker symbol VDY, and this is the Vanguard FTSE Canadian High Dividend Yield Index ETF. So a lot of big words there, yep. But this actually tracks the FTSE Canadian High Dividend Index, so it is an ETF for the index. And yeah, as you can see here, it's recently trading at $37.83 per share, and over the past 5 years, it's actually doing pretty good. It did have the dip back in March 2020, as did pretty much every other ETF and index fund and all companies, but you're going to see it's picked back up and it's gotten back up to pace. And this year it is doing pretty well. It's up 46%, which is quite a bit. But in terms of long-term gains, if you hold this stock for the long term, because that's what you're probably doing for this, for indexes and ETFs, you're going to be able to get a decent dividend yield of 3 to 5%, and also some growth in your companies because they are holding some major financial institutions. And right now, I'll read off their top holdings. Keep in mind they do distribute monthly dividends, but their top holdings are Royal Bank, TD, Enbridge, Bank of Nova Scotia, and TC Energy Corp. So 3 out of the 5 I just read are financial institutions, one of them being a gas company, and the other, TC Energy Corp, is not not a financial institution or a gas company. But they are pretty diversified. They are 50% on the financial institution side, but other than that, they do have some diversification there. It's not 100% diversified, so if you're looking for maybe a more diverse stock, then you could go that way, or you could invest in some of these individual stocks, these high-paying dividend individual stocks separately. But overall, for $37.83, pretty good index ETF to put your money in, and with a good yield. All right, and the next ETF we're going to be looking at is the BMO Canadian Dividend ETF. This ETF does also trade on the Toronto Stock Exchange, and it's currently trading at $17.93 at the time of this video. Over the past 5 years, it has been doing pretty well, and it did have that big hit in March, and it has not fully recovered yet from it. But over the past year, we're going to take a look here at the year. I can click the button, and it's up 46% this year, as most stocks are. Most stocks and ETFs are up quite a bit this year, coming back from the crash and with all the printing of money. But yeah, that's regardless. It has a good yield of about 4% recorded right here, 4 to 5% dividend yield. So really good stuff. And for $17 a share, not a bad option for people just looking to put a few shares in, diversify your portfolio even further. And right now, I'll read off their top holdings. Their top holdings are Sun Life Financial, Power Corp, Manulife Financial, CIBC, TD, Bank of Nova Scotia, and there are a few more. But realistically, this is a more diversified stock or ETF than the past one I just read, because they do have only 34% in financials, 16% utilities, 13% in energy, and 11.48% in consumer services, 7% in industrial, and then the rest are some other industries, but they're smaller, and they are more diversified for sure than the previous ETF I mentioned. Just another monthly paying dividend right here. And now let's go into the third one of the video. All right, and the third index ETF for this video with monthly dividends is going to be iShares Canadian Select Dividend Index ETF, and this dividend yield is an annual dividend yield of about 3 to 5%. 3 to 4% rather. And yeah, it's sitting at $27 per share right now, and it is recovered well from the March 2020 crash. It is growing rapidly this year. It's up 44%, which is crazy. And yeah, overall it is a pretty good growing stock. It has had some dips in the past, over the past 5 years, but overall it is a decently growing stock that is going to pay you a lot of dividends. In terms of net net assets, they do have a lot more than the other shares or index ETFs that I mentioned. This one has about, 1 billion in net assets. The other two I just mentioned, which I did not tell you, had about $500 million in net assets. So something to keep in mind. This one is a bigger index ETF, and its top holdings are once again 58% or over 50% in financial institutions, including CIBC, Royal Bank, Bank of Montreal, Bank of Nova Scotia, TD, and then the National Bank. And yeah, so a lot of bank holdings, a lot of financial institutions if you're into that. And then 11% utilities, 10% communication, 6.7% commuter. I don't even know how to read that word, but yeah, so most of their shares are in financial institutions. The only other one that is not a financial institution, that is their second biggest holding, is Canadian Tire. So keep that in mind if you want to invest in this company. They are holding a lot of Canadian Tire. When I say a lot, I mean about 6 to 7% of their portfolio is consisting of Canadian Tire stock. All right, and the fourth one for this video is going to be another iShares. It's going to be the S&P TCX Composite High Dividend Index ETF unit. So this one is a bit different in the way it operates, and it's basically for long-term growth, and it's trying to kind of replicate the performance of an S&P Toronto Stock Exchange Composite High Dividend Index. So it's not a bad place to put your money either. And you're going to see right here when I scroll down a 4.5% dividend yield to a 5% dividend yield. So pretty good dividend yield. We're going to look at the 5-year mark, and it hasn't quite recovered from the March 2020 crash. And this year it has up 50%, which is quite crazy. And it is, a decent growth stock. Definitely a long-term hold like the other ones too. And it is over 20% it's up over the past 5 years. So not like anything crazy. Most companies and most index ETFs aren't going to be up very much from the past 5 years just due to the March 2020 crash. But overall, not a bad choice and a high dividend yield. If you want to hold this company, you should probably also know that they do have just around over $500 million in net assets. They're holding 75 different companies, and their top 10 holdings, I'll read 5 of them, are TC Energy Corp, Canadian Natural Resources, Enbridge, Royal Bank, TELUS, Pembina Pipeline, Bank of Nova Scotia, BC, and Nutrien. I read all 10, my bad. But yeah, it's currently trading at $22.34 per share on the Toronto Stock Exchange, so not a bad option. And yeah, that's all I really got to tell you about this stock. Real quick before we go to the last and final high dividend yield monthly index ETF, I'm going to just tell you guys their holding breakdown: 30% in energy, 30% in financials, 13% utilities, 11% in communications, and then 7% in real estate, 4.8% materials, and then the rest are some miscellaneous stocks, which I'll let you guys go figure that out on your own if you want to invest in this ETF. Also, keep in mind, if you want to invest in any ETF, go look them up and do some research on the individual ones before you invest in them. Don't just take my word, floating head on the internet for a financial advice. This is not financial advice, it's just educational content. And with that being said, let's go to the fifth and final stock ETF for this video. Alright, and the last high dividend yield index ETF we're going to be taking a look at here is another iShares, and it's the S&P TCX CDN Dividend Aristocrats Index ETF. And it is I believe the communication section. So we're going to look here, and it's about 3.6% dividend yield, 3.7 recorded here. And when we go to the past 5 years, it has been recovering quite well over the past year. It's up 52%, which is more than the other ones that we looked at. And their top holdings are going to be TransAlta Renewable, Fiera Capital Corp, TransContinental, Enbridge, Northwest Company, and Interex Renewable, Granite REIT, so a little bit of real estate there, BC, CIBC, Capital Power Corp. And that comes down to 23% of their holdings are in financials, 15% utilities, 13% industrial, 12% real estate, 9% energy, 8% consumer staples, 6% communication, and some more there that I'm not going to list right now. But they are pretty diversified. They aren't over 25% in any one of these sectors or in industries, so pretty good. Hold. Definitely a growth or more of a dividend yield stock than a growth stock, as most of these are. But if you hold for long term, they definitely can grow over the past 5 years, up 23%, pretty similar to the other ones over the past 5 years. and in the past year it is up 52%, also pretty similar to the other index ETFs with high dividend yields. So yeah, that's the fifth and final one for this video. I hope you guys enjoyed this video or found it helpful in some way. If you did, please smash the like button, and keep in mind, always do your own research before you invest in any stock or ETF or whatever it may be. Do your own research. This is not financial advice coming from me. It's just some educational content, and I hope you guys found it useful. Thank you guys so much for watching. It's been your friend Jack. Keep learning and keep earning. Peace out.